have read, how come I have a million of these open? How many of you have read chapter 4? Just curious. Well, I'm going to talk about chapter 4 today. Because you read chapters 1 through 3 for the first day, right? So, of course, you keep going. Even though the syllabus says I'm not going to talk about it until later, would that be a really good idea to read? Yeah, this next quiz is on what? 3 and 4. So, do you care when I talk about 3 and 4? Not really. 4 is tougher than 3, maybe. So I'll start with 4, and then we'll come back. How many days do we have on these 2 chapters? How many days in class? Anybody know? How many? 4. 2 days each chapter, and then we'll do a review also before the test, or before the quiz, right? And then we'll do a review before the test, and geez, there's all kinds of opportunity to get this stuff. Okay, we're going to do deferrals and accruals today, and you've already done deferrals and accruals. We did it in chapter 1 and 2, okay? We just didn't call them that, so now we're going to call them that, okay? Defer something, accrue something. What do you think defer means? Anybody know what defer means? I don't mean in accounting, I mean anything. Defer something. Later, put it off, right? I'm good at that. Yeah, defer it, right? Defer the work till later. It's called procrastination. Okay, anyway, defer, okay, is put it off till later. Guess what accrue means? Just the opposite. What is it? Recorded in advance of it happening, you accrue it, right? Okay? Defer is put it off till later, and then we get our cash transactions where it happens at the same time. What am I talking about? It happens at the same time. When do you get the cash and when do you earn the revenue? Okay? Or when do you pay out the cash and when do you incur the expense? You guys on a whole, I'm really pleased this semester, you guys on a whole are working. I can tell. Shows instantly. That's why I like to give a quiz so fast. You guys have been reading these chapters, you've been doing some homework, you've been thinking about it, you've been trying to get this stuff wired, haven't you? For whatever reason. I hope it's because you just have a thirst for knowledge. Certainly it has nothing to do with the fact that Richardson's hard and you want to get a decent grade. No, who cares? Grade's just going to happen if you work your ass off. Just will. It always does. You know what? All the raises and all the promotions happen if you work really hard. You show up positive every day and you go after it, it'll just happen. You don't need to ever worry about anything. Like, what for? You work harder than everybody else. You get more done than everybody else. They're going to get rid of you. Not unless the business goes bankrupt. And if they do, one of the competitors wants you. Bad. Right? It's okay. That's how you do it. Okay? So, anyway, let's do this. Let's do revenues. Everybody knows what revenues are, don't you? It's good. It's your earnings process, isn't it? And let's do expenses. Okay? And let's think about this. For revenues and expenses, what happens? What are the 3 possibilities with a revenue? When could you get paid? Assuming you're going to get paid, and we'll handle not getting paid in a couple chapters, okay? Because that could happen. It's called a bad debt. Right? Bad people don't pay bad debt expense. Okay? Or you can call it uncollectible accounts expense if you want. That's what it is too. Okay, anyway. So assuming you're going to get paid, what are the 3 possibilities? You might perform the services or deliver the goods right now, and they could what? Pay you now. So now, we need to know how to account for that. You already know how. That's one possibility, isn't it? Okay? What's another possibility?
Prior.
They could pay you in advance, prior, right? In advance, before. Everybody agree with that? Because you get paid in advance. And you don't usually get paid in advance, do you? But do you pay your insurance premiums in advance?
Yeah.
Yes, if you want insurance, right? That's because they're big and powerful and you're not. You have to pay them in advance, you don't get insurance coverage, huh? There's another really good reason for it. How many of us would be willing to pay our insurance premium if we already knew we didn't have a wreck with our car? Now it's after the fact. They better get in advance, right? Okay? That's why McDonald's doesn't allow any credit. You really want the fat fix until you eat it, don't you? Then after you eat it, you're kind of ill. Did you pay for it now? No, you want them to pay you now, right? So anyway, so they don't grant any credit. So yeah, it could be now or it could be in advance. Absolutely. What's another possibility besides now and in advance? By the way, these are common sense, aren't they?
Yeah.
This is just common sense. What do you have to memorize in this class? Debit means left, and you put the assets on the left. We're done memorizing. This is just common sense. Of course, people could pay you at the same time that you earn it, or they could pay you in advance. What's the other possibility? There's only one more. Later. We are going to be able to handle those 3, and when we real soon, like today. And if we can handle those 3, we can do everything. I mean everything. Because there's no other possibility, is there? If you're going to get paid, that's it, huh? Okay, think about the expenses. Now, on the expense side, we always pay our bills, so there's no such thing as a bad debt, right? Actually, if we go bankrupt, we might not pay them, right? But we don't intend to do that, okay? All right, let's hope not. On expense side, what's a possibility? I could use up whatever it is, the goods or services, right? I could use it up, rent or salaries or something, utilities. I could use it up and what, guys? Pay for it when? Now, it's the same thing, of course, just the other side of the deal, okay? We call those cash transactions. Now is a cash transaction. You know, cash in exchange for the revenue, cash in exchange for the expense. So we call that a cash transaction, okay? So these are cash deals. Cash. You already know how to do those, okay? What's another possibility? We buy somebody's services, right? And we are going to do what? Pay later. Well, that could be later. I'll take that. I buy them and I'm going to pay them later. I'm going to wait. Okay? By the way, well, we'll come back. What's the other possibility? One other possibility. In advance. Everybody agree? If I pay my insurance premium in advance, I have prepaid insurance, which is an asset. If I'm the insurance company, I get paid in advance, I have unearned insurance revenue. Unearned premium, which is liability. Get to that in a second. What do you think is deferring and what's accruing? This is really important. Get this one down because this will drive you crazy. What am I deferring? Am I deferring the exchange of cash? And what am I accruing? Am I accruing the exchange of cash? You can't defer or accrue cash. If you get cash, what do you do? It's an asset. You have more. What do you do, guys? Journaling. What do you do if you have more cash? It's an asset. You have more. What do you do, everybody? Debit it, of course. What do you do if you pay out cash? Credit it. You can't defer or accrue cash. It's impossible. You either got it or you didn't, right? What can you defer? Oh, if they pay me in advance, I can defer recognition of the revenue. What do I mean by recognize something? You acknowledge, right? And you know what it means? Record it. Record the journal entry, which does what? When you make a journal entry, credit revenue, what have you done? You've recorded it and it will show up where, guys? On the income statement. You will have recognized it in the income statement. That's what recognition is. You'll recognize it. How about if you debit expense? That would be what? You debit an expense account in a journal entry, what will happen? On the income statement, it'll show expense, won't it? What will you have done? Recognize the expense and decreased income. Yes, it's decreased equity. But you'll recognize the expense, won't you? This is recognition. Recognizing something is recording it in a journal entry, and therefore it hits the financial statement. Big deal, huh? But acknowledging, recognizing, seeing it. Got it? Got the idea? Now, we separate that from realization. What realization means is the money changed hands. When do you realize the revenue? When you receive the cash. It doesn't have to be at the same time as you recognize the revenue. It doesn't have to be when you earned it. Okay? We separate those things. If somebody pays me in advance, I haven't earned the revenue yet. If somebody's going to pay me later, though, I have earned the revenue, even though I'm getting paid later. And I want to show the revenue in the income statement when I earned it, not when I get paid. What do I want to show on the balance sheet, though? The cash I've got, or the receivable I've got, the payable I might have, the prepaid I might have, the unearned revenue I might have. Okay, so it's going to get a little more complex. I'm going to try to reflect economic reality in those financial statements to the extent possible. I'm really just estimating economic reality, but I'm estimating and trying to get it recorded, which means recognizing the statements. Everybody got it? So what would a deferral be here? What do you think a deferral would be? I am going, I'm not deferring the cash. I'm deferring the revenue or expense. So which one of these would record the cash now, but wait to record the revenue? When I get paid in advance, right? I haven't earned it yet, so I'll defer the revenue. Here, what will I do? I'll defer the expense until I use it up. We'll do this a bit, right? We'll do this a bit, so to get in your head. Okay? What would an accrual be? I earned the revenue now, but I'm not going to get paid until later, so I accrue the revenue. Okay? Be an account receipt. This would also be an accrual on the expense, be a payable of some kind, salaries payable or something, right? I'll record the expense, but I'm not going to pay for it till later. And now I got your head swimming already, don't I? If you have read the chapter, I still have your head swimming, because you read this stuff and it's kind of, whoa, you know, what's going on? So it's kind of good to talk about this before and after you read it. So I'm not surprised most people haven't read it. It's cool, those of you who have, because you get a little bit more today than those who haven't. But you still need to go back and look at it, right? So pound on this, pound on this. Why am I not talking about you reading chapter 3? Because you did it before we got here. I'm not talking about that anymore. Right, guys? I'm your boss. You told me you did something a couple weeks ago now. That's done. Right? Unless I find out later on test you didn't do it. Then I'll reward you appropriately. Got it? So keep it out. Category. That's how it works. Right? That's how it works when you go to work too. People trust you. Did you do that? You say, yeah, I did it. And then when it's not done later, what do you think? You're not only lazy and incompetent, you also lie. You're out of here. Can't even tell me the truth. If you haven't read a chapter, what should you tell me? I did not read the chapter. Right? True. I never lied about anything because my mom, if I got caught, she asked me, and I confessed whatever I did, right? I never got in trouble. If I lied, all hell broke loose. Build integrity on the children, huh? I mean, I thought I was going to die if I lied. Because you always knew whether I did it or not anyway. What the hell, why lie? Your boss usually knows whether or not you did it when they ask you if you did it. What do you need to do? Fess up. Yeah, I screwed that up royally. In fact, what you should do when you screw it up, is go see them and say, this is really screwed up. It's probably going to cause a mess later. And then it'll get fixed before it causes a mess. And they'll laugh at you. Okay? Be all right. I would if I was your boss. And I'd be glad you came and told me, huh? Screwed it up. So let's do these. These are the only possibilities. Let's go. Somebody give me an example of a revenue where I earned the cash now. We'll do revenues first. Thanks to just a mirror image of it anyway. But let's do cash now. So let's pick some kind of business to be services, not goods. We got cost of goods sold there. It's easier with just revenues, okay? Without the expense side. We'll do that later, okay? Some kind of business frame where we provide services. Anybody got one? There's a car repair. No. Car repair shop. The parts, though, would be, we won't have any parts here, okay? The parts would be you're selling product, right? Goods, right? Well, your services are a product. You sell goods. Inventory. We have cost of goods sold for that part. But let's just do the service side, okay? Car repair shop. The labor, right? You're selling services. That's excellent. So we got a car repair shop. Only you're a car repair shop that repairs things, vehicles for, who should repair vehicles for? What company has vehicles that has their vehicles repaired? All of them. Anybody who has a vehicle, right, has to have their vehicle repaired, right, maintained. So who could it be? Unless they're doing it internally themselves. I was thinking of UPS, but guess what? UPS probably has people that repair their own vehicles, right? I'm sure they do. Okay, so let's think of a business that might have somebody else repair their vehicles. BMW? They probably repair their own vehicles too. They repair other people's vehicles too. That's a different business. Right? That's revenue for them. Okay. Who repairs their own who has vehicles repaired for them by somebody else? Who? I bet Apple would. I bet Apple does not have a repair shop for their vehicles. Probably not. They don't bother with that. But you bet they have other companies do it for them. Apple'd be fine. Pick a business. Anybody. Yum Brands? Sure. Papa John's? Sure. They don't have repair shops. What for? Why would UPS have one? Lots of repair shops. That's what they're in business doing, is delivering stuff. So they have all kinds of equipment, all kinds of airplanes, so they do take care of them themselves. It can kind of make sense. Probably more effective. Apple, compared to their full business, how much is vehicle repair? It's tiny, right? It's tiny for them. Almost nothing relative to their total revenues, huh? And their other expense accounts. So yeah, let's say Apple is the customer, okay, guys? Apple's the customer, okay? Okay. And then who's doing the repair? What's the name of your repair shop? Who decided to repair shop? What's the name of it? Best Motors?
Best Buy Motors.
Best Buy Motors. Hello. Whoever they are. Do they exist? Okay. And what they do is they provide services for car repair. Okay? So what is this going to be? Let's say it's, let's make it an easy number. Let's make it $1,000 a month. Apple, $1,000 a month? Okay. I don't know. $1 million a month. Okay, whatever. Anyway. So let's say it's $1,000. So what would it be to Apple? Apple has cars repaired, right? Oh, no, it's going to be expense. Why do they have the cars repaired? Because they'd like them to run. Why would they like them to run? So all their employees can do what? Make it wherever they're supposed to go with that car so that they can do what? Sell goods and services, which is generate revenue. So is this one of the costs of getting that revenue? Yes. Anything that's an expense is a cost of generating revenue. So it's going to be expense for who? Apple, right? This stuff will be expense for Apple. This is common sense, isn't it? If you understand the business transaction, you have it made. What's it going to be for Best Buy Motors, of course? Why do they repair cars? To become wealthier. That's how they earn their revenues, right? One of the ways. Okay? Probably sell cars too, huh? Okay? Revenues. It's going to be revenue for them. Okay, so we're doing the revenue side here, right? So let's do cash now. Let's say it's for the month of, I don't know, let's pick a month. March, okay? So it's now March 31st. This is not typically how business to business works, especially if you're dealing with somebody like Apple. Okay, but it's cash now. So you've repaired their cars. You're Best Buy Motors. You've repaired $1,000 worth of repairs on automobiles. Got the idea? Or trucks or whatever it is. You've done 1,000 repairs this month. When did you earn the revenue? When you repaired the cars. So you've got some sort of service revenue, don't you? Okay, not sales, because we're not selling inventory. Some sort of service revenue. Great, okay? And Apple has some sort of service expense, right? Repair and maintenance expense, maybe? That makes sense, guys? That's what it is, okay? And cash changes hands. So Best Buy goes into Apple's office and gives them a bill, and Apple gives them a check immediately. It's not how it happens. What you really do is you send them a bill, right? Or email them a bill, right? Wire them a bill, and then they pay you, right? Later. Okay, that's how it usually happens. Well, let's say it was a cash bill. It could be. What would Best Buy record? Best Buy is recording the revenue. What would they record here? Devil what? What would they get? Cash, which is a asset. Yeah, more or less. More. So you already know how to do this, don't you? Don't recreate it. You know how to do it. It's debit cash, isn't it? How much? 1,000. Credit what, you guys? Why did we get cash? Because we did what, you guys? We provided services, which is how we earn our revenues, and we have now become wealthier. We have more net income, don't we? Because we have more revenue. So I'm going to record the revenue. Why? Not because I got paid. I'm going to record the cash because I got paid. What am I going to record because I earned revenue? Revenue! What do we want to call it? Yeah, how about car repair service revenue? We put a name on it that implies what it is, because these guys might have a whole bunch of different service revenues. So you call it car repair service revenue, or whatever you want. You can call it car repair revenue, but we know it's service revenue, okay? For our purposes now, put service on it, okay? All right. And then if it's the sale of goods, we'll call it sales for now, okay? All right, which everybody does anyway. All right, we're done with the deal, aren't we? That one's done. Everybody see it? Okay. All right. Then what? What if it's going to be cash later? Let's do later first. This one's more intuitive for people. Cash later. I'm going to get the cash later. Okay, so what happened is in March, at March 31st, what have I done? I'm going to get the cash later, but I have done what in March? Car repairs. I did the services. So what do I have because I provided the services? Come on, everybody. What did I have here when I provided the services? Service revenue. Who cares when they pay me? What do I have when I provide the services? Service revenue. That's it. Assuming they're going to pay me, and again, we'll handle them not paying me later. Okay? All right? So what would I record because I earned the revenue? Revenue. How do you increase revenue, everybody? Credit, right? You know this really well, don't you? You know how that model works. Why do you increase revenues with a credit? Because they increase equity. Equity is on the right. Therefore, equity has to be a credit. So it's increased with the credit. So therefore, revenues are credits. Subconscious now, isn't it? It's getting there, starting to. You still have that little chart I suggested that you write everything down on? Right? No. All right, did you do one? A little accounting model? Assets equal liabilities plus equity. Revenue less expense is net income. This is over here on the left, so therefore it's increased with a debit, reduced with a credit. These are on the right, so they're increased with a credit, reduced with a debit. Revenues are a subset of equity, so they must be what? Credits. If I wanted to reduce it, debit it. Expenses have to be the opposite, and also they reduce equity, so they must be what? Debits. Net income is a credit, net loss is a debit. So you guys have this so well that you don't need to have it in front of you anymore? Wow, I'm a brilliant teacher. Okay? If you do, fantastic. If you don't, what should you do? Write it down, have it in front of you. Yeah, that's all we're doing. That's what we're using here. So when I said it's got to be a credit to revenue, of course it does, right? Not because revenues are on the right-hand side, they're not. They're a subset of equity, right? It's a different statement completely. It's the income statement. But as revenues go up, my wealth goes up, right? You're increasing equity with a credit, so revenues have got to be a credit. True? That's all we're doing here. It's nothing new. This is not new. So what happened to them? They're going to get cash later. So what would we record because they earned the revenue? Well, that's the debit. I'll agree it's going to be an account receivable because they're going to pay me later, and that's the asset I'm getting. But what about the revenue side? Did I earn the revenue? Yeah, what do you want to call the revenue? How about car repair service revenue? Exactly the same account. We don't care when they're paying us. We care when we earned it. Don't make up a new account. Okay? Now, a company can, if they want, they can have cash sales and credit sales. They can do it if they want, but most companies don't bother. Okay? So I'm going to credit cash receipts service revenue. You like it? This is easy, isn't it? And he did have the right idea. What do you want to debit for $1,000? They did not give me cash. Don't debit cash. Didn't get any cash. They promised to pay me later. What's that for them? For them. Payable. For us, receivable. And it's on open account. If I'm just trusting them, I can have them sign a note. What is it? Accounts receivable. If you suggested to Apple they should sign a note, they'd think you were a crazy person. You don't trust us to pay you $1,000? Are you kidding me? Right? Sign it. Okay, anyway, so debit accounts receivable and credit service revenue. Everybody good? But then what's going to happen? That's at March 31st. Let's say you give them 10 days to pay. When are they going to pay if they pay on time? 10 days later. When's that going to be? How about April 10th? Even I can figure this out. What are they going to pay us with when they pay us? Cash. This is hard, isn't it? They gave me cash. It's an asset. I have more. What do I do? Debit cash. Now, are you going to credit service revenue again? What, you earn revenue twice? Once when you do the work and once when they pay you? I think not. You earn the revenue when you earn it, when you did the work. What do you do when they pay you? You debit cash and credit what, everybody? Yeah, you don't have the account receivable anymore. Absolutely, the account receivable is just going to go away. Is this common sense? You bet it is. Okay, now I want to show you something right at this point. Take a look at what happens in both of these on the balance sheet and income statement. Let's do assets equal liabilities plus equity. That stuff familiar to you guys? Revenue's fine. Revenues less expenses is net income. You can always go back to this to figure out what you're doing. Okay? What happened here? What happened there, you guys? Debit cash, which is a asset, I have more. This went up by 1,000. Everybody agree? Okay? What happened to the service revenue? It went up too. That's what you did, right? What happened to net income? Went up by the same amount, 1,000. What happened to your equity, your retained earnings? Went up by the 1,000. Everybody agree? And we're going to want to show it at March 31st. We want the cash on our balance sheet because we have it. And we want the revenue on our income statement, the net income on our income statement because we earned it. And we want the equity to be increased by the amount we earned. Everybody got it? That's all we're doing. Just trying to reflect economic reality. Nifty little system, huh? Okay, what would happen with this cash later? It's a little different. A little different, but ending up at the same place. Because what happened was we earned the revenue and we got paid. It just happens to be in 2 different months. So where would we be at the end of March? At the end of March, when we do a financial statement on March 31st, say we do a balance sheet and income statement on March 31st, where will we be? What do we have? Debit accounts receivable is what? More of an asset accounts receivable. Everybody agree with that? Credit service revenue, more revenue, which gives me more what? Net income, which gives me more equity. What's different between those two? You're getting paid later, so I have accounts receivable on my balance sheet instead of cash, right? It's the only difference here. It is the only difference. They promised to pay me later. I still earned it. Right, guys? You don't earn it when you get paid. You earn it when you do the work. Do you guys, anybody have a job where they get paid after they do the work? Like maybe a week delay? When did you earn the money? When you did the work or when they paid you? When you did the work, of course. Right? Now they owe it to you, right? They have a payable, you have a receivable if you did the work. Now, I'd rather get paid earlier, too. I'd rather get paid in advance. I like money now, right? Although getting paid in advance is really demoralizing. You know, and I've done that in public accounting. You weren't sure they were going to be able to pay you like they're going into bankruptcy or something. You always get your money up front. Now you realize we already got the cash, and now we have to do all the work. It's kind of depressing almost, right? We're not going to get any more cash, but we got to do the work. If you don't do the work, what do you have to do? Give them their money back. Yeah, you haven't earned it yet, right? Haven't earned it. Okay, then what happens the second month down here? What does that do, you guys? I increase what? Cash. And what do I reduce? Accounts receivable. And guess what? You're in exactly the same place, aren't you? Now you have cash instead of the account receivable. The account receivable is gone, isn't it? Now you have cash and you have more income and you have more equity. Everything's cool. Why do we do this? Because I want to show people what happened at March 31st, where I'm at, and I want to show people where I'm at April 30th, and those are slightly different in this case, right? That's it. So we're doing, okay? That's what this is an accrual, right? I'm accruing the revenue even though I haven't been paid yet. So this is an accrual of revenue, okay? Guess what we're going to do next? Yeah, let's do an advance, which is going to be called a deferral, huh? Sound good? All right, it's going to be really similar, except I get paid in advance, huh? Okay, so let's do it. Cash in advance. Got it. Okay? That's going to be a deferral of the revenue, and this one's going to seem kind of strange. You guys can imagine account receivable probably, but this is weird. This is going to be unearned revenue. It's revenue I haven't earned yet. What do I owe them? I just suggested that. If somebody pays me in advance, what do I owe them? Whatever they paid for. The services, right? The unearned accounting fees in my case, right? I work in public accounting. Suppose they're unearned auditing fees or something. Okay, so what happens? It must be they pay me before March 31st, huh? So let's say February 20th, just picking a date. Let's say February 20th they pay me and I have done nothing for them. What do I do? What do they give me? Cash, which is a asset, and I have more, so I'm going to debit. Always let yourself do that, right? You won't flounder, right? I got cash, I got cash. Here when I got cash, what did I do? Debit it. Here when I got cash, what did I do? Debit it. What do you want to do here when you get cash? Debit it, of course, it's an asset. Got it? So I'm going to debit cash for $1,000 because they gave me $1,000. But I don't want to credit, what was it? Car repair service revenue? I don't want to credit that. Why not? I haven't earned it. I'm not going to put it on my income statement until I earn it, right? I will not recognize it yet, even though I realized it. I got the cash, so I'm realizing the cash came in. But I'm not going to recognize the revenue because I didn't earn it yet. When did I recognize the revenue on the cash deal? At the same time they paid me. When did I recognize the revenue on the credit deal, the accrual? When I did the work. Ah, different, right? But I'm always recording it into the work. Down here, I'm going to wait till I do the work to record it too, huh? On the deferral, everybody got the idea? So what do you want to credit? A liability named what? You could call it deferred revenue if you want. You like that? Good name for it. Or more commonly, you'd call it unearned revenue, which is deferred revenue. Okay? So when you put the word unearned in front of revenue, and you know what we could call this? We could call this unearned car repair service revenue. I don't care. Right? Companies can name it whatever they want. This is very flexible. Students always ask me, what do you name things? And my answer to that is, name it what it is. You like it? But give us enough names so we can tell what it is. Okay? All right? So, unearned service revenue, you want to call it that? That's the 1,000. Okay? Everybody got it? Then what? What happens at March 31st? What do you do in March? You provide the services, don't you? As you provide the services, how do I do that? I'm going to play some music for you. Okay, as you provide the services, what do you do here, guys? You debit the unearned revenue. Why would you debit unearned revenue? I don't owe them the work anymore because I did the work. So what do you want to do with unearned revenue? Want to get rid of it? It's a liability. How would you get rid of it? Debit it. Why did I credit unearned revenue, by the way? It's a liability. I wanted to make it larger. Right? How do I get rid of it? Debit it. Debit unearned service revenue. That's the same accounting system, right? Okay, 1,000. And why am I doing that? Because I earned it. And what do I do when I earn something? Record it as stuff I earned it for. Revenue. What do you want to call it? Let's see. Is car repair revenue there? Car repair revenue here. What do you suppose it is here? Car repair revenue? Do you think? This is too easy. Car repair service revenue. If I can keep you guys reading all semester and showing up for class all semester and paying attention all semester, we are going to have a blast. Me and you. If you start fading and dropping off as other classes start requiring you to work too, how many of you had to work very hard in other classes yet? Yeah, that's good. I'm glad you had more than one. If you're a freshman, welcome to tell them. Well, you should be. Well, your sophomore, junior year, it's going to be that way. Okay? And yeah, it is, isn't it, guys? It's going to really pile up on you. Okay? But what usually happens is people will put most of the work, the deliverables, midterm and final, right? You have big projects coming up in your classes. You have every single project that you have to do and every single exam and quiz you have to do on your day timer, on your calendar. You should, with warnings, weeks in advance. Oh shit, get to work on this paper, right? I'm going to be in deep shit if I don't get this thing going. Right? Don't wait. But you're welcome. I'm giving you points early on here. Right? Isn't that nice of me? No, you can acknowledge this is a really nice thing I've done for you. It is. See, she's shaking her head, yes. But one, I get one. Okay, anyway. So what does that do, you guys? What does that do? Ah! Stop it. Did it again. Stop it. Go away. Much better. Okay. All right. Let's do the same thing here. Here we go, gang. Keep working. That's the message. Please keep working. Okay. Well, what did this first entry do here? Debit cash did what? Increase in asset. What did credit unearned revenue do? Increase the liability. Are we in balance? Yes. Did we change our net income? No, because we didn't earn anything. What do we do in the March 31st one? Decrease a liability. It goes away, doesn't it? It just canceled out, didn't it? And then what else happens? Increase revenue, which increases net income, which increases retained earnings, therefore equity. Do we end up at exactly the same point? Yes, of course, because we provided services and got paid. But what about the February 28th financial statement? What are we going to show on our income statement? Nothing. What are we going to show on our balance sheet? More cash and more liability, right? We are. Then what are we going to show at the end of March? We'll still have the cash, but now we'll have more equity. Liability be gone. Big deal. That's all we're doing. Does everybody see it? It's not a big deal, is it? Okay? All right, let's try the other side. Not hard at all. Let's switch to who was buying this stuff? Apple was, huh? Okay. Let's show what we show on Apple's books. So let's do the expense. It's just a mirror image of that thing. Okay. What are they going to be the 3 times that we might pay for this? Cash when?
Now.
Now is when. Do that one. Okay? And what was it, March 31st? Okay, we'll do that one. Okay, and what else is there?
Cash.
Okay, so March 31st we earn it, and then what was it, April 10th to pay us? So we're going to have two journal entries, is that what it was? You know, if they're doing business with each other, that's probably what it's going to be, huh? Right? Doing business with each other. Okay, and then what's the other one?
Advance.
Cash advance. Cash now is a cash transaction. Cash later is a accrual. I'm going to accrue the expense. Cash in advance. Deferral. I'm going to defer the expense until later. Okay, good. You know what accruals and deferrals are. Well, by the way, this is way too advanced for you guys. I treat you with way too much respect. I know most people think, oh, there's no way in principle you could possibly learn this stuff. It's easy, isn't it? Everything you know how to do is easy. I used to say in the executive MBA, I always say, this isn't rocket science. Come on, you guys. Learn how to do this. It's just work. Learn how to do it. And they're doing it really, really fast. We're doing 101 and 102 in 7 or 8 meetings. No kidding. Just boom, boom, boom. But you know, there's successful people already that have learned. Right? You guys are going to be there. You guys are going to be there. You can learn that fast. So anyway, I would say it's not rocket science. Just learn. It's not rocket science. This guy raises his hand and he says, Keith, I'm a rocket scientist. And this is what? He says, I'm a rocket scientist. Honest. He works for a company that makes rockets. And he's a scientist. He's got a science degree. Yeah, anyway. Yeah. Engineer, scientist, right? And he says, this sure as hell isn't rocket science. It's much harder. And I said, the reason this is harder is because you don't know how to do it yet. He says, yeah, probably. It's always true, guys. Be humble, too. Things you know how to do, big deal. You know how to do them, they're easy. Everybody else who knows how to do them thinks it's easy, too. Don't brag about what you know how to do. Just learn how to do something else, too. Got it? Real successful. Be humble about it. Who cares? In here, I'm pretty arrogant, aren't I? Out in real life, I have nothing to say about it. You know, I'm a bookkeeper. I went to my 10-year class reunion. I was a manager in a CPA firm, making really good money. I was a bookkeeper. Another guy was a legal clerk. He was a partner in a law firm. But we didn't tell anybody. Why would you tell anybody? Some people might not be as successful as you, your friends. My daughter does not tell anybody how much money she makes from any of her friends. She makes way too much. My son, however, he brags. No, I'm kidding. He doesn't brag, but he doesn't earn what she does either. He does really good public service type things. He's an attorney too. He's a deputy prosecutor, and now he's a public defender. I didn't make any money. He just does good things for society. What a loser. Kidding, right? Kidding. So anyway, daughter, she makes some money, but she's a good mom though. Okay, so she's got redeeming qualities too. Okay, deferral. What's that going to be? What were the dates? February 20th, I said. It's just, the idea is you get paid in advance, right? Okay, and then March 31st. Okay, you guys are so smart. Do them. Write them down. What must they be? What must they be? You can figure this out. What happened? Do the first one. That one we've already done, haven't we? Do the first one. This is on Apple's books, right? Apple's buying this stuff. And they're using it up, right? As soon as the cars are repaired, they're repaired, and they start using them, right? Maybe they're changing the oil, changing spark plugs, I guess. Yeah, so it's an expense. It's gone, right? You've used it up. As soon as you've used it up, it's an expense. Until you use it up, it's an asset, right? You buy something, you haven't used it yet, it's an asset. If you have used it, it's an expense. Debit what? Credit what? Do it. Real quick. It'll be done, right? Because it's all in the same month. Go ahead and write down your journal entry and then think about what happens on the financial statements. Okay? Do that. Everybody got it? What'd you get? What'd you give up? Well, first, what'd they give up? They're Apple. They're buying these services and paying for it. What'd they give up? Cash, which is an asset and you have less, so credit cash. By the way, you can write down the credit first, it's okay, just be sure to put it down a way so you can put the debits first. And notice I'm putting the credits to the right and the debits to the left, both the account and the number. And we can tell what they are. I gave you credit on yours to the extent I could, right, on your quiz. Some people put them all in a row, and I don't know what to do, I gave them half the credit. Okay, so if I could figure out what you were trying to do, I gave you credit. From now on, please put them where they belong, huh? Makes it easier. Easier to grade, easier for people to understand what you're trying to do. Credit, cash, and debit, what? I used it up. I'm Apple, I used up the car repairs. What do you want to call it? Service expense. Car repair expense? Car service expense? I don't care. So let's call it car repair expense. You like that? But yeah, it's a service expense. It's an expense. I've used it up. What happened in my balance sheet and income statement? What does the credit to cash do? You have to know or you can't do the journal entry, right? It's simple. Reduce the assets. How about car repair expense? It went up, didn't it? The debit. What happened to your equity? Down. Why? Because net income's lower. Did you guys all have that? Did you have that entry? Okay. What do you do then on the accrual? What happens? They repaired the cars and I'm going to pay them later. They sent me a bill. I know about it. I'm going to pay them later. What do I have because they did the work for me and I used it up? They did the work for me and I used it up. I have an expense, guys. Come on. Right? True? You haven't been here very long. Don't go brain dead. The last 10 minutes. Don't ever do that. Lots of classes, that's where they tell you everything you need to know. True? Right? Get behind you. Oh my gosh, you're going to get through this. They tell you what you need for the test in the last 10 minutes. If you've gone brain dead, what happens to you? Oh well. Okay? So what do we want to do here? What do we have? Car repair expense, because it was done, right? But what do they have? Yeah, accounts payable of some kind, or car repair payable. Call it accounts payable here typically. If it was labor, I'd debit salary expense and credit salaries payable. Give you that kind of stuff later. Okay, just preference people have. What happened there, you guys? What did you just do? Do the assets equal liabilities plus equity, revenues less expenses, net income. Here we go. What is a credit, a debit to expenses, car repair expenses do? It increases it. What does that do to net income? Reduces it. What does that do to equity? Reduces it. Okay? And then what's accounts payable? What is that? Liability. What happened? Increased it. Everybody see that? I don't want to show less cash because I don't have less cash. I have more liability instead, don't I? So that's what I'm going to have on my balance sheet at the end of March. What am I going to do in April? I'm going to pay it. What am I paying it with? Cash. What do you want to do to cash? Credit cash. And what do you want to debit, everybody? Accounts payable, because I don't owe them anymore if I pay them, right? I don't have the expense twice. Don't do that. Why would you do that? Right? So what happens then? Accounts payable goes down. That liability's gone, isn't it? And what else goes down? Cash. You know what? I have assets down, equity down, because expenses up and net income's up. Down, right? Gee, that's here. Assets down, equity down, because expenses are up, which made net income go down. It's exactly the same deal in both cases. Of course it is. Right? You used up the car repair, right? You have the expense, and you paid for it in both cases. The only difference is you're going to do a financial statement on March 31st and another at April 30th. Huh? Okay, let's do the deferral. What's that going to look like? Cash in advance. So what do I give them? Cash. So when you credit cash, I don't know about you guys, but every time I pay out cash, I credit cash. Don't you suppose? What am I going to debit? I do not have car repair expense yet. They haven't done the work for me yet. What do I have? They promised to do the work in the future, and they are going to do that. So what do I have? Not an account receivable. They're not going to pay me back. I paid for something in advance, which is prepaying it. What is it? No, they have unearned revenue. I have expense that's not an expense yet, which is an asset. Prepaid expense. So what I'm going to call it is prepaid car repair or prepaid car repair expense. Okay, let's get this clear. You know, there are really nice apartments downtown that cost $2,000 a month. You guys aware of that? Actually, there's some that cost $5,000. But the really nice ones in the high rise there, right downtown, right by the park, $2,000 a month. What if my wife and I paid for 12 months for you in advance, $24,000? Think of the party she could have, right? $24,000. Do you think you would have an asset if you had rent paid for a full year in one of those really nice apartments and you get to live there for free? By the way, we don't have $24,000. My wife would kill me if I spent a nickel. Okay, so no way. Grandkids, yes. Go talk to your grandparents. No, they're not going to do that. Okay, they're not crazy people. I won't do that for my grandkids either. What would they do with it? Yeah. When they're your age, you'd have parties and get into the jail, so I still won't do it. Okay, but, right, this would be an asset. Wouldn't you get the idea if you pay for something in advance, you don't have to pay for it again, you have an asset? As you use it up, does the asset go away? Yes. So what did this do? I increased the prepaid, which is an asset, and I decreased the cash, which was an asset, didn't I? So here we go, you guys, real quick, seeing as I'm out of time, of course. Prepaid went up, cash went down. Everybody agree? Do you care on your balance sheet whether you have cash or prepaids? Of course, cash is better than prepaids. I don't know about you, but I'd rather have cash than a prepaid any day if I'm a business owner, right? Got the idea? Okay, so it's just a different asset. What are we going to do on March 31st, of course? We used up the prepaid, right? Because they did the car repairs for us. What do we have because they did car repairs? What do we have here when they did car repairs? We have car repair expense. What do we do here when they do the car repairs? Car repair expense. What are we going to have here when they do the car repairs? Car repair expense. Obvious, right? So I have more expense by 1,000, but I'm not paying for it again. Don't credit cash, and I'm not going to pay for it later. Don't credit accounts payable. What is it? I used up the asset named prepaid car repairs, and it's gone. A prepaid expense is an asset. Unearned revenue is a liability. That's it. What is this going to do? It's going to raise expenses, right? That's raising expenses right there. Sure, you can see that. Okay. It's going to reduce the asset, so that prepaid just got wiped out, right? Okay. And what do I have? Less net income and less equity. Just like the accrual and just like the cash deal. Just in different months. So there's the whole picture. If you knew how to do this, you'd have a base for the entire semester. And you will. It's wise. Yeah. Let me kill this.
It really just fun.